Did you know that there are countries in the world that are ditching the dollar for their Federal Reserve? And that's because if you print enough of this, you start to wonder, is it even worth the paper that it's printed on? Well, I got news for you. Today, we're going to be talking about what's going on with the US dollar. It is terrifying because there are countries, large countries, that are starting to ditch us. Is this the beginning of a really nasty decline? The great America, no more? So, have you heard about de-dollarization? Seems sacrilegious, right? We've always been told you shouldn't burn money, you shouldn't deface money, you shouldn't destroy money. It's a bad thing to do. Check it out. At the end of March, China and Brazil reached an agreement to trade in their own currencies instead of the US dollar. This is the latest development in a movement away from the dollar as the world reserve currency, which is supported, by the way, by a number of other countries, including China, Brazil, Venezuela, Russia, Saudi Arabia, India, and others. In other words, the world is changing. So let's talk about dollar supremacy, because there was a time when the American dollar was it. Check it out. The US dollar gained supremacy as the world's reserve currency since the end of World War II. And while many other nations were recovering, since then, the power of the dollar has grown, and it is still the most commonly held reserve currency, making up more than 60% of global foreign exchange reserves, but it's no longer 80%, 90%, 100%. Let's look at whose money has been running the world through time. First off, what is a reserve currency? A reserve currency is a foreign currency that a central bank or treasury holds as part of its country's formal foreign exchange reserves. Countries hold reserves for a number of reasons, including to weather economic shocks, pay for imports, service debts, and moderate the value of their own currency. In other words, you take a look at cryptocurrency, and most other cryptocurrencies are based on what? Bitcoin, because traditionally it had been the most stable. Similarly, people have looked at the US dollar and said, well, this is the most stable, so our own currency is not as stable. We've got to be backed by something that we can lean on that is far more stable. And the US dollar is not doing that job anymore. Here's a brief history lesson on the last 500 years. Portugal in the 1500s, basically their currency was it for the world. Then it moved to Spain, Netherlands, France, Britain, and for the last 90-ish whatever years, it has been the United States. The question is, who's going to be next? And how long can we really hold this place? I paid $100,000 years ago to get in Tony Robbins' camp. I paid $100,000 for this financial retreat. And there were some really cool people, including the Prime Minister of Great Britain, that attended, but also Ray Dalio, one of the most successful hedge fund managers of all time. The dude has returned like $27 billion to investors over time. The dude knows how to invest money. He gets the game of money. And this is what he had to say about the dollar's decline. Ray Dalio has calculated that the average nation maintains their status as the world reserve currency on average for 94 years, giving the dollar only a few more years. As the dollar's status wanes, the monetary stability will be shaken and investments in America will decrease. In other words, if we're no longer the world power and other people are using other currencies, their own currencies, they trust it more than the dollar, then that means that people, if they're not investing in the dollar, they're also not investing in America. And I'm just going to tell you, this does not bode well for us because we've enjoyed a lot of great stability as a superpower, and that tide is shifting. And as that happens, what are you supposed to do about it? We've been talking about the global economy, the US economy. Let's talk about your personal economy. If you've been responsible with money, you're likely putting money and stashing it in a 401k. Maybe you're putting it in an IRA to save a few bucks from the tax man. Maybe you've been focusing on some Dave Ramsey-esque pay off my house. Either way, there's a plan, and it's probably an accumulation plan. You may not be holding a lot in savings because banks aren't super safe right now, and so you're holding it in your retirements, hoping that it's going to be enough for your future. But that's not the case, especially with the weakening of the dollar, because any gains that you are making are being knocked out by inflation, which means that you're losing money right now. You're not gaining money. If you have $50,000 sitting in a bank account, you're losing at the rate of inflation 6% on your dollars. If you have it sitting in the S&P, 401k, IRA stock market, and on the 30-year average, it's growing at 6%, subtract 6% from inflation, and you're breaking even. In other words, the dollar is being hurt right now. Is there a place where you can put it where it can become stronger. Well, this $50,000 could come out of a 401k, an IRA, or even equity in your home. And you could put it, for example, in real estate. Real estate has held its value stronger than the dollar through time, through any other investments, and there's 4 major reasons why. Number 1, real estate produces a steady income, right? It's cash flow generating. I buy an asset, I rent it out, it's commercial, I rent it out to someone else, it's a single family, it's a multifamily. People are gonna occupy it and they're gonna pay this thing off with time. So it's producing cash flow and it's very predictable. Number 2, real estate is also a store of value. The land has value and the building has value. Real estate assets hold value despite fluctuations in currency, including inflation. And it's not just, despite that, it's not just the ultimate hedge against inflation, it's that the worse inflation gets, usually the better real estate performs. Then you also have appreciation. Real estate assets in high demand like collectibles or real estate, they tend to gain value over time. So we know that for 2 years post-pandemic, we saw a 41% increase nationwide in real estate. And what comes up at some point does need to come down. But what you can be rest assured of is that real estate is going to keep gaining and appreciating in value over time. And you want to factor that into your ROI equation. Lastly, it provides diversification. Real estate is a non-correlated asset, meaning it doesn't trend with changes in the stock market, cryptocurrency, 401ks, IRAs. All of those are stock market based. They're soft markets. They're being pummeled right now. Real estate, on the other hand, it's experiencing quite the opposite. Real estate right now is not just the safest place for your money, but there's a really easy way to get it in the market in the most intelligent way possible. So I've transacted over the last 20 years, over $2 billion of real estate for me, for my financial partners, and that totals now over 6,500 homes. I got news for you. I was buying pre-2008, post-2008, I was buying before the recession that we're in right now, and I got news for you. The dumber the decisions that the government makes, the better real estate performs. Which means right now is actually a really brilliant time to get in the game, because when the market's down, real estate is when you want to get in, and this is when you want to play. When the market goes up, you want to hold your real estate. In fact, the reality is you want few homes to become many homes. This is how I became financially free. So if you got money sitting in a 401k, IRA, a bank, equity in your home, I want you to click the link below, and I want you to learn about partnering with me. Because what I'm going to do is I'm going to show you a model where I can give you a fish instead of teach you how to fish. I'm not going to give you a job and teach you how to do real estate. I'm just going to do it for you. And this is how I've been able to build my wealth everywhere in businesses. I partner with people. I find people that are brilliant, have track records, that are good at what they do, and we find a way to come together. And what we do is 1 + 1 = 11. That's a lot more than 2. Did you see what I did right there? That's a 1 and a 1, right? So coming together, there's so much wealth that can be created, and real estate is just one of a dozen different ways that I do it. Click the link, learn more about my track record over the last 20 years, and what you can do instead of just kind of holding your breath and keeping your head above the waterline. What if, on the other hand, one house over 20 years, when you're ready for retirement, literally turned into $1 million, $5 million, $17 million? Well, I'm going to show you some pretty cool stuff based on the numbers. Click the link below, learn about partnering. Let me show you. You know what this is right here? That's a piggy bank. It just doesn't look like it because it doesn't have a pigtail, but literally this is the smartest piggy bank on the planet. And if you want to learn how passive real estate can be, how easy it can be to actually do it the right way, click this link and let me show you how to get your oinker on.